Ladies and gentlemen, hey, this is Mike Price, president of LTI Mortgage, and I want you guys to pay attention to this video because this one's going to get real interesting. What I'm going to be doing here is I know I've been putting out a lot of rent versus buy information out there, but what I did today is I used the total cost analysis and kind of broke this thing down so that people can really see the benefit of actually buying a house versus renting a house. So what I've done here is I live in DeSoto, so I found an apartment in DeSoto. It's 2 bedroom, 2 bath. That thing is $2,075 a month, which is insane. I mean, this is not downtown Dallas. This is DeSoto. We're in the suburbs, all right? And it's only like 975 square feet. So what I want to do here is show people the difference of what renting versus buying does for you and how that deal really manifests itself for you financially in the long run to see what you're actually missing out on. I mean, and I've never been a person to tell people, hey, you're just throwing away money if you're renting. I mean, obviously, like I say, you got to have somewhere to stay in. If you're not in that position to buy yet, definitely you want to take this into consideration and look at it to where you can put yourself in that position to buy, whether that's getting your income up or getting your savings up for the down payment. If you got to get down payment assistance, there's some programs out there for you. If it's your credit, pay them people their money. Work on your credit and get that deal up. But without going on with this deal, let me switch over to this total cost analysis and show you how this deal works out. And any agents out there that need this for their clients, we can tailor one specifically for them. All right, so here's what I'm looking at. We have a total cost analysis, rent versus buy. Today's December 17, 2021. All right, here's that property right here. That's for rent. $2,075 a month on a mortgage. If you bought this house, $300,000, right? You're looking at a payment of $2,106, tax, insurance, principal and interest, all that included, right? My rate is 2.625 today on a 30-year FHA with halfway decent credit. I mean, we're talking 650 to 680. You can get in that deal for 2.625% to get that payment. That's not what this video is about. What this video is really about is showing people, hey, here's what happens when you actually go in and you rent instead of buy, right? In 60 months, 5 years, right? Here's what you're looking at. You're going to spit out $145,000 in total rent. All right. In that same 6 years, you could have paid your mortgage balance down by $34,000. All right. So what we'll do here is we'll jump into this more info. The net cost on this deal. All right. You're going to rent for rent $145,000. Buying this house, you're going to end up spending $91,000. Same amount of time frame, but just look at the difference, because actually what we got to do is that 145 includes a rental increase year over year. Now, the average in Dallas, the rent's going up about 15%. I used a measly 5%, 5. And here's what that that spread looks like. I mean, 145 to 91 over the same time frame. And a $300,000 house is not going to be 900 square feet or 980 square feet, or however big it was. But also, check out what the value of this property is in the first 5 years also. So now you bought it for $300,000, but using that same 5%, that deal's gone up a total of 20% in 5 years, or 25%. So now that property is worth $400,000. And here's what you owe, $260,000. So far in equity, you've got $141,000. All right. Now here's where it gets extremely interesting, and this is the thing that the people need to pay for, especially the people out there who say, "Hey, I gotta have the biggest house on the block. I don't want to buy this house because it's too small, or it doesn't have a pool. It doesn't have all of that." Hogwash. Forget all of that. Pay attention to these numbers. Buy your own pool. Check this out. All right. Now, in 15 years, right, rent with the increase, you spent a net cost of $671,000, right? Same 15 years buying that house, you spent $253,000, because this rate right here, this is a fixed rate. That payment is staying the exact same. This rate here, it keeps going up, and that's 5%, but 5% over 15 years is a whole lot of percents, ladies and gentlemen. Here's the other deal. People don't pay attention to this. The value of this house now, 15 years later, using a 5% increase. And if things keep on the way that they're going, it's going to be way higher than 5%. But the value of this house in 15 years has a projected increase to $718,000. And basically that's $719,000. But your balance is $175,000. You have $500,000 in equity. Over here, all you did was spend a whole lot of money and you didn't gain any equity. This is what people are trying to tell you, but they just don't know how to get it across to you. And They're just repeating what they've heard someone else say, is saying, hey, you're just throwing money away. Well, technically you're not, because you're renting a space. It's going towards something. You're just not building that wealth. Ladies and gentlemen, that is generational wealth. I mean, if you buy a house right now and you die 15 years from now and you got a kid, your kid can sell that house and walk away with $543,000. This is where people mess up right here. $543,000 in equity. All you did was, instead of renting a place, you bought a place. I can't stress that enough, ladies and gentlemen. All you did was, instead of renting a place, you bought a place, and you spent $75, $20, $30 more a month. And that $30 more a month turned itself into $543,000. Some of y'all spend $30 a day at lunch. I know you're spending $30 a week at lunch. So look at this. Pay attention to it. I can't hammer this home enough. And like I said, my name is Mike Price. I'm president of LTI Mortgage. Any realtors out there watching this video and you need to help get some clients off the fence, send them to us. We'll build one of these out for their specific needs. Maybe it's a $350,000 house. Maybe it's a $500,000 house. Maybe it's a $150,000 house. Regardless of whatever it is, definitely let them take a look. See this. I guarantee you, once they see this number, everything becomes a lot more purposeful. You're going to get a lot more urgency behind them, because if someone had told me 15 years ago that my house was going to be worth $500,000 or $700,000, all I had to do was go out and buy a property. I mean, I did, but had I known then, I probably would have bought a little bit bigger house, because that gap would be a lot bigger. I mean, my property, we've got equity in it. But look at this, $543,000, $30 a month. I keep going, $543, $30 extra a month. That doesn't make any sense for anybody out there not to buy a house. I know prices are going up. Get in while you can, because as prices go up, so is this number right here going to go up. That's all I got. Hopefully this video helps somebody make a decision to actually purchase a home. And like I say, if you guys got any questions, let me know. Mike Price, president of LTI Mortgage, LTImortgage.com. Let me know what I can do to get you guys helped out. Take care.